Hi, Chris Lee, Chris Berg, and Chloe White. Pleasure to see you today. My apologies, we're running 10 minutes behind.
No problem.
It's not bad considering we started at 7:45 this morning, right?
Well, there's a lot of good content.
Yeah. Yes, a lot of good content. Well, I welcome you all. Chris is a friend, a mentor, an advisory board member to Link2, a shareholder, a gentleman, academic, and a great moderator. So I asked him to help me with this one because I'm very confused. And I'm sure if I was here alone with Chloe and Chris and Nick, they'd run circles around me. So thank you all. Chris, if you'd like to introduce yourself a little bit further, then we can go with Chris and Chloe and Nick. Start your panel. I'll be off air for a few minutes and then come back as necessary. Thank you all.
No problem. Thank you so much. Thank you so much, Kareem. So this is Chris Lee from FAA Investment. So I am an early investor into Link2, and as you heard from Kareem, also on the strategic advisory board, working with Bill, Kareem, and also the rest of the Link2 guys. So let me just briefly introduce my distinguished panel, and then I'll ask them to also give you an update, and then I'll go into the questions more directly. So, well, welcome, Chloe White. So zooming in from Australia. So Chloe is managing director of Genesis Block, which is crypto asset consulting company. So are you currently in Melbourne or Sydney, Chloe?
I've just flown into Sydney yesterday.
Great. Well, welcome. So I know you're an expert in policy development, and it's always good to have young and successful people like yourself on our panel. So welcome. And second on our panel, Chris Berg. So this is actually Professor Christopher Berg, right? So you're author of 11 books. I think the last count, did I get the number right? 11?
Something like that. Look, after a while, you do lose count.
Yeah, so Professor Berg is zooming in from Australia as well, from the Melbourne Institute of Technology, which is like the MIT equivalent in Australia, founder of the Blockchain Innovation Lab, and also a very prominent voice, right, Chris, in free markets and also in the individual liberty space. And so I would also add by saying that during, I think, 2019, 2020, you made very, very good use of your time, and you actually published a book in August of 2020 with the title of The New Technologies of Freedom, which is basically, you know, what we are doing today. We're stealing your title. We're calling our panel the Digital Assets, Today's Technology of Freedom. So welcome, Chris. And so last but not least, we have Nick Mitsakos. Nick is from California, so he's one of us, local here in the Bay Area. And Nick is chairman of Arcadia Capital, a family office, and chief investment officer, CIO of Arcadia Capital, is a multi-strategy hedge fund. And Nick is also managing partner for YF Capital, the Yanfeng Capital, which is affiliated with many people from Alibaba in Hangzhou, China. So Nick, as an investor, as an educator, as an author, is also an expert in digital assets and also healthcare and also startup companies. And currently, Nick, you are also in the process of publishing a book, I understand, is titled Investing Principles and also Strategies, right? So I hope I got the title right. So
thank you very much. Right, it's great to be part of this, and you know, I'm in awe of Chris having written one book and him having written 11. I can't imagine, but it's great to be part of this.
Yeah, I don't think I did justice with that very short, introduction. But maybe we can start out with Chloe first, and then Chris Berg, and then Nick. Just tell us a bit more about what you are doing now, just as part of your background for the audience. We have a lot of private equity investors who have been investing in private shares on the Link2 platform, and now they're also interested in digital assets. So if you can just give us a little bit more update of what are you up to, and then I'll go backward again to ask questions. Yeah, Chloe.
Thank you, Chris. So at the moment, I am working with investors, managed funds, private equity. There are a lot of investors wanting to allocate capital into the crypto asset space at the moment. And it's a big challenge for investors because a lot of the traditional valuation models that you might use don't work very well when it comes to crypto. And so it's about going through that education process and finding frameworks and models that can be applied consistently to understand where value will accrue in the space and how that value is captured as well. And that leads to the issue of regulation, which is something that I've seen that investors and funds are quite interested in, because investors understand that when you create the rules of the game, that has a direct flow through to impacting who gets to capture value. And so it's a big day down here in Australia at the moment, because just as we're speaking, having this conversation, our federal treasurer is also giving a speech where he's currently outlining the path forward for the government's crypto policy. And so at a high level, they have set out their response to a long and detailed inquiry that's been underway in the Australian Senate for quite some time now, looking at where are the gaps in crypto asset regulation. And that's something that I've been very closely involved in for a number of years now, but particularly in the last 6 months, working across the Australian crypto asset industry to help understand where are those regulatory priorities and what are the win-wins, you know, the no-brain solutions that you want to implement that are good for business, good for consumers, good for investors, and help to lift Australia's competitiveness globally. And it's been a pleasure as well to work closely with Chris Berg and his team at RMIT and helping to provide some of that thought leadership in Australia. So we're really pleased to see the government's response today, that they have been very quick and also very sensible in the response that they've put out to those Senate's proposals. So, you know, really I'm straddling that world between the investor space, the regulation side, working with a number of crypto asset businesses. I have a number of advisory roles, including with Blockchain Australia, who's the industry body here. So it's a big day and a very exciting time.
Very good. Yeah. Well, staying with the Australian theme, so Chris Berg, maybe you can also share a bit more updates from your side, especially RMIT and the Innovation Lab.
Yeah, of course. Thank you for having me. It's really excited to have this conversation today. As Chloe was saying, it's a funny day for us, and there's a lot going on. So my day job is running a Blockchain Innovation Hub, which is a research center at RMIT. We do fundamental research into crypto and the blockchain economy. We do a lot of courses, so we've got undergraduate degrees, postgraduate degrees, micro-credentials, just teaching people around the world about crypto and blockchain and Web3 and all the associated technologies there. We do a lot of public policy, which of course we'll dig into today. The other thing that we do is, my background is as an economist. And fundamentally, this technology is an economic technology. And when industry builds cryptocurrencies, and when they build token platforms and they describe their tokenomics, what they're building is tiny little economies plugged into the real world, but sort of self-sustaining economies that have flows of value, have different incentive structures and so forth. So one of the things that we're doing an increasing amount of is helping teams build out what we call the crypto economic design of these platforms. So who are the stakeholders in any given protocol? Who is paying who? What does the token look like? What are the tokenomics? How many tokens are there? Are they minted? Are they issued? What is an inflation rate? All those sorts of things. So as a research economist, as a research social scientist, it's just amazing to see some of the most frontier ideas in economics be not just valued by industry, but taken and built, and so that we can see them in the real world, and we can come up with really frontier, say, for example, voting systems. And 6 months later, it's live on a protocol that manages billions of dollars in total value locked. And so just on a personal level, this is just an insanely interesting industry. I think it's done so much. It's actually taught us a lot about how economies work, and it's taught us a lot about the changing shape of the overall macro and microeconomy into the future.
Yep, yeah. So the government piece that you mentioned is going to be the first question that I'm about to ask. But before we do that, because we're such a trans-Pacific group, so we'll be moving over to the west coast of the U.S. where Nick is located. And Nick, maybe you can just give us a brief update on some of your exciting projects currently.
Well, thank you, Chris. And one of the things, and we've been touching on this, that we're seeing tremendous disruption in the financial world. Now, what does that really mean? So first of all, disruption I defined as an opportunity to create tremendous wealth, and prosperity creates freedom. And I know we're going to touch on that, but and I've stolen that idea from Amartya Sen, right, the Nobel Prize winning economist. And the idea that we've seen this, and you mentioned some of my partners, where we lived through some economic disruptions from 20 years ago that ended up creating a lot of wealth. And so now we're seeing the world's largest industry, which is finance, fundamentally disrupted because of these digital platforms. And so suddenly, anyone can touch anything from anywhere, and that can be done. And in the financial world, that creates tremendous opportunity, tremendous freedom. But the other thing we've seen is, in order for that to work, then you need stability to the value that you're exchanging, and you need to have property rights. We need to have legal enforcement of those property rights, right? So I know I'm kind of giving you a segue, Chris, into this kind of first topic, but while it's freedom, it's not the Wild West. That doesn't create true disruption, right? And just to give a little context, one of the things we think about is, let's see, last time we've seen this kind of disruption globally was about 120 years ago. We're in about a 20-year frame, right? We had the automobile, the airplane, the electrical grid, and then the telephone, right? We had all of that. Now that changed the world. That created tremendous wealth. That really impacted people's lives globally. And, we're seeing something now which can touch people globally. And that's a platform. I know Chris talked about these mini economies and the ability to deploy kind of immediately and test and see if something works, and there's very little incubation time required. That's pretty dramatic. We're only at the beginning of that. And so that's one of the things that excites us, where we're saying, well, we've got to play in this game because we know there'll be great opportunities, and they're emerging, as we participate. And and then we need a solid foundation to enable that.
Yeah, thanks for that lead in. Let me stay with you first, Nick. And we're diving deep into the technology of freedom, theme here, right? So if we look at that, and then I'd like to ask Chris Berg and also Chloe to comment on the same topic, which is, what do you see the central government, the legal system, and also the central banks playing in this on balance, right? Do you all see them as being helpful, or are they detrimental to this whole exercise? So let's go with Nick first.
Yeah. So Chris, the way I would think about that is you start off with mortal enemies, decentralized finance versus central governments and central banks. And yet I think that it is a relationship that's essential. At the end of the day, I think having the stability of value that can be exchanged and the enforcement of that value is something that a government and a central bank plays a key role in. And I know we've also touched on like the Libra project through Facebook, and we'll touch on more of that. But you looked at something that fundamentally was a very interesting idea that could suddenly touch a global audience with a stable currency, Libra, and they spent a lot of time thinking that through. But that required the cooperation of central banks, and central banks that support value within a currency and keeping that currency within a tight range, right? Now, there are lots of issues as to why that created all those the problems that it had, and that's another topic. But I think fundamentally we saw, if a thoughtful approach, and let's back up. On Facebook, I can touch 2 billion people a day, apparently, right? So if I want to touch them with now a financial system that enables everyone to interact, one of the first fundamental assumptions I need is stability to that. And I think that stability can be provided only by a central bank, and a central bank that can manage a currency, and as we've seen in the dollar, the euro, the yen. So I'll just sort of make that bold statement that they are mortal enemies that need to live together in order for mutual prosperity, to raise the bar for everyone.
Right. Yeah. So Chris Berg, what's your take on that, central government and the whole legal system in this discussion?
Well, I mean, so we all live in jurisdictions. I can't move into the metaverse. I'm going to have to deal with property taxes. I'm going to have to pay taxes to the local warlords, what have you. So there's an inevitability, and of course in the, you know, when I started looking at tech policy as an industry in the 1990s, of course we had these parallel debates, right? So there was this idea that once we're on the internet, then we're in a sort of non-state environment, and as we know that hasn't played out exactly as some of the more utopian thinkers have thought. I think what's interesting to me though is the what's interesting about cryptocurrency as a technology, or blockchain as a technology, is that it fundamentally challenges some of the basic assumptions behind much of what the state does. And I'm thinking not at a macro level, right? Not at
so let me ask the person to mute himself.
Yep, all good. So it fundamentally challenges some of the basic assumptions between regulatory policy, not what the state does, but really specific things, like how does it regulate particular stuff? How does it denominate things? And it's that, and it's on those, you know, how does it describe what a currency is from a taxation perspective, from a regulatory perspective? How does it describe what in Australia, we have a managed investment scheme regime. And the key thing about the managed investment scheme regime, which manages funds and those sorts of things, is that it's managed. It's got a manager, and there's somebody who's responsible for it. Now, if we build a managed investment scheme on the internet that is not managed, or only managed by an algorithm, then, well, how do we fit that into law? Is it unregulated? Do we need to make some changes? Now, Chloe and I, as we're thinking about what the government's going to do about DAOs, about capital gains tax, what we're looking at is just driving into these really specific problems as they've emerged. So to step back, Nick, I mean, you know, what is a role for central banks in this space? And I'm not convinced that we're going to discover much of a role for them, not because that we're not going to have fiat currency anymore, but we're actually going to be narrowing the space by which they can operate. So it's all well and good to say, you know, we need someone to keep the monetary policy stable, but in an environment where everybody's actually using currencies from around the world costlessly and trustlessly, it's going to be very hard to do that. So I think what we're going to see over the coming decades is some obviously some interesting tensions, but a consolidation of what governments, not what they want to do, but what they find that they can do in this new environment.
I see. Well, I mean, Chloe, you are an expert in public policy and also policy development. So any more to add to what Chris and also Nick just share with us?
Yeah, thank you, Chris. I think that it's important to be clear on what we're trying to achieve when it comes to these issues of regulation. You know, by living in a democracy and by having regulations, we are accepting a set of trade-offs to begin with. And so I think that for me, the policy discourse does need to be grounded in understanding what are the principles that need to be applied. And what is the goal that we're trying to achieve? And the conversation that I want to see have in Australia and globally is to make it clear that the role of regulators is not to prevent any kind of loss or mistake from happening. That would be a dystopian scenario. But I think a more helpful role that governments and regulators can play is in helping to reduce information asymmetry in markets. And so, you know, there may be a situation where, you know, consumers who are wanting to get exposure to this rapidly growing asset class may have had experience investing in equities or more traditional assets and may not understand that those kinds of protections that they might be used to in the traditional banking system do not apply in crypto assets in a lot of cases. And so it's making it really clear what are the risks and giving people the information so that they can make an appropriate decision as to how much risk they want to take on. And so on the issue of CBDCs, I think that it is something where the Australian central bank has been a little slower and a little more cautious than some other central banks around the world. But I personally think that that's quite appropriate and justified. They've been doing research into wholesale CBDCs and partnering up with Australian banks to explore where they can generate efficiencies there. On the question of a retail CBDC, the central bank in Australia is taking a much more cautious approach. And so one of the recommendations that the government has accepted today is that the Treasury should be looking into the potential benefits of a retail CBDC. And so it will be interesting to see what they uncover and what perspective they might take that could add to the research that the central bank has already done. And they have been looking at CBDCs for a number of years now. But I think that the important thing for central banks globally to understand, and this is where my view does differ from the view of the BIS and some other central bankers, is I do not accept the premise that by issuing a central bank digital currency, you're automatically displacing demand for crypto assets. I think if anything, you'll actually encourage more adoption and create a gateway into that system, because a big reason why people are so excited about these open source blockchain platforms is they have this modular nature where there is a lot of interoperability between the different platforms and services that you can access, and it provides you a really easy way to manage your money and your investments. And so if you're a central bank looking to issue a CBDC in a closed system that doesn't have any of that interoperability, you're not really filling the demand and meeting the experience that people are having in the crypto space, which of course is not to say that crypto is perfect, and it definitely has its issues too. But I think that to understand why people are excited about this may give central bankers something to think about when they're designing their CBDCs. How can they also improve the experience for people, for businesses when they're interacting with financial products and services?
Yeah, can I just make a point there, and even just to reiterate Chloe's point, because CBDCs are on one interpretation a desperate last grasp on behalf of the central banks. People don't like crypto because they are a slightly better or faster or cheaper version of fiat currency. They like what they can do with it. And they like that they can do the strange DeFi stuff. They like that they can do the strange NFT stuff. They like running DAOs, all those sorts of things. And I think the best version of a CBDC, the most effective version, will actually supercharge the crypto economy. It's quite counterproductively from the policymakers' perspective. But the CBDC is, I think long term, when we look back on it as we are all entering retirement, we will think that that was just a weird distraction.
Yeah, well, I love that CBDC discussion, and I'll come to Nick now, because I think, other than the central bank CBDC stuff like Bitcoin and others, these are basically sort of like a CBDC type of assets, right? So Nick, do you think these are sideshows, or do you think they are critical to the whole digital freedom, right? So, if you can comment on that one.
Sure, I do. I think that one of the things that crypto's enabled is us to understand that there can be this digital settlement globally, and as Chris was mentioning, this blockchain platform, which enables so much opportunity. But I think crypto itself is a sideshow. And it's a speculative asset, and there's no such thing as a currency that can depreciate 20% over a weekend and then bounce back another 7 or 8% in one day. That's not a currency. That doesn't give stability to value. So two things are going on. There's an asset, whatever that asset may be. It could be a loan, it could be an NFT, it could be and anything that can be digitized, and everything can be, right? So all IP, all these things, those are assets. And those assets have their own value. And Chris, you and I start a venture capital firm. We can issue a token that's reflective of the value of the investments we make and the appreciation or depreciation of that value, right? Okay, that's an asset, and that asset can now be liquid. It can be traded. That's fantastic, right? But underneath that, there's a fundamental value that needs to be agreed upon to that asset. Now, think of currencies today globally, right? Well, if you're holding Turkish lira, or Argentine peso, you're not very happy these days, right? Because there's a dominant currency, the US dollar, and euros and yen, yes. But what happens when things are decentralized? When left to their own devices, they centralize, right? 80% of all international transactions are ultimately dollar denominated, right? Commodities are dollar denominated. There's a centralization that occurred, right? And what I'm saying is, if you have a global decentralized platform, and I completely agree with Chris, it's like, this is one of the great things about the crypto world is what you can do. But underneath that, there needs to be a stability to enable it all. And because that stability, I believe, is connected to central bank issued currencies or central bank managed currencies, right? I think central banks will play a role. And I think it centralizes. And by the way, I think that, an international community, and we're talking about there's 1.7 billion people approximately unbanked. Like, I don't think they want to own the local warlord currency. I think they want some stable currency. And I think that there's a momentum for global stabilization, probably around a handful of centrally bank managed currencies. And I know that that's a little kind of to the side here of what people believe, but I really do think crypto showed digital works. But if you really want something, that's a sideshow. It's an asset. It's a speculative asset, and that's fine. And I even own some digital currencies, but I regard them as a speculative asset. I don't regard them as a currency. Right? And I think it's really going to play
on that being a sideshow, right? Crypto. I mean, Chloe and Chris, do you have any comment on what Nate just mentioned?
Look, I think I 100% agree. So the Bitcoin was released, and depending on which sentences of the Bitcoin white paper you read, it's a payments network, or it's a money, or and I don't want to dig into Satoshi's views, but it hasn't succeeded as a money substitute, and it hasn't succeeded as a currency in that sense. Nick, you're 100% right. So what has happened is that we are using stable coins as that sort of risk-off asset that you go into when you're worried that the market is going down, and that's fine, and that's all pegged against fiat currency. So right now we live in a world that there's a fiat currency. I'm not convinced that we're always going to live in that world, but that's my speculation, because we don't have any proposals on the table. What I think is interesting about digital assets, or digital, I'm going to call them currencies, even though that may not technically be right, digital currencies right now, is that we have such an enormous design space by which we can build digital asset currencies that can really do whatever we want. Maybe we want them stable, maybe we want them slightly more stable than Bitcoin, but not stable like fiat. Maybe we want them to have contracting functionality, maybe we want them to be super private. And it's that innovation that really excites me, to see where we're going to start using these in ways that we hadn't used money before in any sense. Money itself, that's a social technology. We've all got to agree to use the same one for it to work. We're not at that stage, but what we are at is this wild experimentation.
Very good. Yeah, I know that we have just a few minutes left, so let me ask, one other key question that is, I think, central to this panel. And that question is, what role do you think the big tech firms like the Facebook and also the Apples of the world will play, right, in this whole discussion about the freedom and also our technology? So maybe I can start with Nick, and then go to Chris, and then I have Chloe, and also give us some concluding remarks before Karim come in and cut us off. So Nick, over to you.
Well, thank you, Chris. And again, I mentioned before, Facebook, we suddenly woke up, and I say suddenly, but they realized, we're touching billions of people. We can enable a platform for interaction quite seamlessly using a blockchain technology and a currency on top of that, thus Libra, right? And you're seeing, of course, in China, Chris, we saw, with WeChat and Alipay, it's like, a couple of apps taking $18 trillion of volume, right? Suddenly, right? So now you've got large tech companies that reach billions of people globally, and they can play a role, right? And I believe they want to play a role. And Chris is touching on, well, there's all this innovation, all this experimentation, and these guys are not sitting idly. And so there's a lot of activity there. Now, I think that ultimately, if you go back to my initial thought about it, you've got sworn enemies of, let's call it the decentralized finance world, and central banks and central governments. In the middle, you've got the big tech companies, and maybe everybody just hates them, right? So we can't agree on anything except we don't like those guys. And I think there'll be a lot of friction there, Chris, honestly. And I see great opportunity for those companies. I think that, and Facebook's a great example, that regulators will step in and say, we're just not going to let that happen. You can't have this role. And I think that's why decentralized finance on the chain, on the technology that we're talking about, still becomes pervasive and global. And then the opportunities, I think, for stability and property rights and enforcement become an important role for government. And then I think big tech plays on top of that, but I don't think they control it. I think they could control it, but I don't think they'll be allowed to, quite honestly. But I think that's my perspective about it.
That's great. Yeah. Let's move to Chris Berg, and then I will save the best for Chloe.
Look, so there's a spectrum, right? So there's a spectrum between technology companies, the big tech firms, the FANGs, and on the other side, there are these decentralized, wild organizations that are managed by token holders and all that sort of thing. I think that we're going to see the tech companies start to fill out that spectrum in between wild decentralization and not. And the Facebook's DM cryptocurrency is a perfect example of that. It's a central tech company. It wasn't planning to decentralize itself. It wasn't going to do an airdrop and release governance tokens over Facebook, but it did want to play in the space. I think we're going to see a lot more of that. I don't think it's going to be very successful though, because my expectation or my analysis is that these technologies are fundamentally disruptive to the way companies work, to the way we interact with the services that we provide. And it may well be that Facebook or Google or Amazon set up their own decentralized services that they can plug into. But I think once consumers have a taste of the breadth of innovation unconstrained by corporate demand, I think they're going to edge towards decentralization very quickly. We've seen this happen already. So in the supply chain space, we some years ago, back in 2017-18, spent a lot of time talking about, well, would there be private blockchains that manage supply chain implementations for blockchain? Most of those private implementations are either moribund or just didn't get the adoption that they expected. So that halfway house has failed before. And I suspect that as more and more companies experiment, that it may well fail again.
Well, Chloe, you get the last word on big tech firms like WeChat, Facebook, or maybe even Apple.
I think there's no doubt that they're going to be looking to find a way to get in on the action. I certainly agree with that. We were talking a little bit earlier about, what is crypto in terms of, is it money, and how can you tell when it is money or is it a payment rail? The majority of growing and healthy crypto asset projects that have real communities and real developer support, they're not trying to be money or to compete with fiat currency. They're using tokens and incentives to fuel economies and ecosystems, like Chris was saying earlier. And so where I'm seeing a lot of innovation in the crypto asset space is in people learning how these incentives lead to growth, also where they lead to problems. And they're innovating on the actual crypto economics of these worlds that are being built. And I expect to see that trend continue and more of those lessons to be learned. And so as the crypto community becomes better and better at designing these systems and getting the incentives right, I think that the big tech firms are going to be also wanting to look and understand how they can take some of those lessons for their own benefit. One obvious starting point would be simply to integrate digital assets into their existing offerings and try to ride off the coattails of the crypto industry. But I think, as Chris said, there's also a reason to be skeptical about how far their success will go. One meme that's propagating in the community at the moment is this idea that platforms and services can be community owned or community run. And if that proliferates and becomes a mainstream idea, I think that will be really interesting to see how the big tech firms respond to that concept, because they're not very well liked by governments or by the public. Companies like Facebook that have battled to try and repair their reputation for some years now. And there is a lot of suspicion of big tech, and there is a growing awareness of the potential harms with some of those aspects of the industry. So I think that there are some challenges that lay ahead, and certainly in the policy discourse here in Australia, the government is very concerned that big tech should not be able to have free reign, and they do want to discipline big tech here. So, I think that's a feeling that is growing around the world, and something that big tech will have to navigate with quite some caution and care.
They do have to navigate very carefully. So thank you so much, Chloe White, and also thank you to Chris Berg, and also thank you so much to Nick Mitsakos, and that was our great panel. So I'll turn it over to Karim, who will run the show.
So Chris, thank you so much. Chris, Nick, Chloe, that was amazing. It kept me riveted to my seat, all for the 14 minutes that we were here, or slightly more. Thank you so much.